Hello friends, in the series on the income tax cases, today we will discuss a very important case on revision proceedings by the Principal Commissioner of Income Tax under section 263. Nowadays, it has been seen that many orders are being revised by the Principal Commissioner of Income Tax on the ground that the order passed by the assessing officers are erroneous and prejudicial to the revenue. The mandate of section 263 is that a Principal Commissioner of Income Tax can revise an order if the twin conditions, that is, first of all the order should be erroneous and second the order should be prejudicial to the revenue, can revise that assessment order. The question arises that whether the powers which have been given by explanation 2A to section 263 gives unfettered powers to the Principal Commissioner of Income Tax to revise each and every order where there is loss to the revenue. This issue has been very well taken up by the Jaipur ITAT B bench in the case of Alok Vijawat versus Principal Commissioner of Income Tax, and this case is reported in 121 ITR Tribunal at page number 481, and the date of the judgment is 13th December 2024. In the present case, there was a survey on the assessee under section 133A, and in that survey, the assessee has admitted in the statement which was given by him that there is some undisclosed debtors, there is excess cash, and there is some unaccounted construction expenses. By respecting the statement of the assessee filed his return when his case was taken up in the compulsory scrutiny after the survey, and the assessee included that income in the form of undisclosed debtors, unexplained cash, and unaccounted construction expenses under the head business. When the assessment proceedings were going on, the assessing officer issued a show cause notice to the assessee that why not the income disclosed by the assessee into the business head should not be treated and calculated under section 115 BBE. The assessee presented his case and the assessing officer accepted the returned income of the assessee and did not tax that income under section 69 or 69A, and accordingly didn't apply the higher rate of tax which is given in section 115 BBE. After that, the Principal Commissioner of Income Tax initiated the revision proceedings under section 263. The allegation of the Principal Commissioner of Income Tax was that the AO neither exercised or issued the show cause notice or conducted the inquiry while making the assessment. The Principal Commissioner of Income Tax was also of the opinion that in the present case, the undisclosed income should be taxed under section 69, that is for unexplained investment, or section 69A, that is for unexplained money. The assessee carried this matter to the tribunal, and when the tribunal heard this matter, the Honorable Tribunal was of the view that in the present case, it could not be said that the assessing officer did not raise show cause notice or apply his mind, because it is very clear from the facts that during the assessment proceedings, a proper show cause notice was issued to the assessee that why his income should not be calculated under section 115 BBE. The tribunal said that explanation 2A to section 263 does not confer blind powers. The tribunal was also of the view that despite enlarging the scope of section 263, it could not justify the revision proceedings in the present case. The tribunal said that invocation of explanation 2A in the present case is not justified. The tribunal said that in the present case, explanation 2A to section 263, although the scope has been enlarged, it does not give unfettered powers to the Principal Commissioner of Income Tax to revise each and every order which has been passed by the assessing officer. The tribunal said that when there is no error of law or facts, the order cannot be revised. The tribunal was of the considered view that in the present case there is no erroneous assumption by the assessing officer of any facts or law. The tribunal said that the AO adopted one of the two or more possible courses which were available to him, and when the AO accepts any of the courses which is as per the law and which is not as per the mandate of the law, then in that case, when the course which has been adopted by the assessing officer is permissible in the law, in that case it cannot be said that order is prejudicial to the revenue, even if there is loss to the revenue, by taking that view by the learned assessing officer. So in the present case, the tribunal quashed the revision proceedings on the ground that the assessment order passed by the assessing officer has not attracted the explanation 2A to section 263, and it is not erroneous and prejudicial to the revenue. At the end of this video, once again I am repeating the name of the case. The name of the case is Alok Vijawat versus Principal Commissioner of Income Tax, and this case is reported in 121 ITR Tribunal at page number 481. The matter has been decided by Honorable Jaipur ITAT B bench on 13th December 2024. Thank you, friends.